moving from the banks, getting into more of the non-traditional financing. Cheryl is the managing partner of MC Commercial, a financial brokerage company. Many business owners come to her when they cannot access the capital they need from their bank. Cheryl deals with many deals that are defined as high risk and require a higher rate of return for the investor. Has anything changed in your industry over the past year? And yeah.
Thank you, Dallas. We appreciate being here today. And yes, over the past 6 months, I've done a lot of research in really what's going on out there. And sometimes you just have to take a step back and take a look at your own situation. And what I have found out there is basically there are all sorts of funding channels, from traditional to non-traditional, and there are opportunities to help clients which can run in tandem with, helping them with their banker, maybe able to achieve goals that they were not able to achieve or to update their balance sheet. But there are a lot of things that have changed. With the continued credit contraction, the alternative funding channels have become more attractive because that now may be an alternate source for qualified buyers. Don't confuse an alternate funding channel for someone with just bad credit or a bad balance sheet. The alternate sources are looking for viable businesses and working with clients who understand their balance sheets. And primarily looking for, what do you really want to do? So there have been a lot of changes. The alternate channels really do focus on some of the same fundamentals as the banks do. Does the project make sense? Who's going to be managing the project? What is our source of repayment? How viable is it? And is it sustainable? And those are all questions that we all need to ask ourselves, personally and professionally with our businesses, to make sure we're all on the right track. So with that, yes, we have seen a lot of changes in the industry in a short period of time, and the consistency is that it's going to continue to change. We hope for the better, but it is going to continue to change.
So we've seen in the news lately that many entrepreneurs are converting their IRAs into self-directed IRAs so they can use these funds for their business. Can you tell us more about how that works?
There are some really good programs out there available, and one I would like to talk about is the 401k business investment product. This is a unique tool that will help business owners to achieve liquidity, and which will have a neutral impact on their balance sheet, because some good points were made from Brad and Mark that liquidity is very important. And this will have a neutral impact on your liquidity ratios that they so much have to, understand. How this product works, it allows the business owner to tap into their 401k. Yes, I did say that correctly. It is your retirement dollars. This is not a loophole. This is not a new product. This is something that is available, that is IRS approved. This allows your 401k to become a passive investor in your business. So the liquidity in the IRA or the 401k, you simply would take that money, invest it in your company. It buys the shares of your business. The price of those shares is something that would probably already be preset, and so therefore that money would be made available to you. There are some specific structural details that would need to be managed to accomplish this, but we have a service that actually would handle that for you. Once it's taken care of or accomplished, the money is actually deposited into an account for your immediate access. Now, be mindful, this is strictly for your business. It's for operations, it's for marketing, it's for hiring, it's for paying salaries, it's for making capital investments, and all that's going to be contingent upon the amount of capital available to be invested in your company. Again, that's passive. There is no it's perpetual. There is no monthly payment. The return on investment back to the IRA is basically could be very long term, meaning that until you sell the business, you do not have to repay the IRA. So it really is available liquidity. And let me make another point there. From traditional banking, and based on my experience, The commercial banks typically cannot include your IRA in your liquidity because it's not generally acceptable and it has restrictions. So if we are able to utilize that from your balance sheet, you can put that in your company, and so therefore you're not going to have to carry that as a debt on your balance sheet because it's not debt. You can finance your business operations either via debt or with equity. It's your choice, or cash out of pocket or internally. So this is just another tool to allow you to do this.